Everyone, I'm CJ Quick, a realtor with Team Goran Remax Care Realty.
I'm Scott Dillingham. I run LendCity Mortgages as well as the Care Mortgage division inside of Team Goran.
So Scott, tell me a little bit about the pre-approval process when it comes to getting a mortgage.
Yeah, so there's a couple of pre-approvals that are out there. There's the one that the banks kind of do, which is just like a calculator. You input some things and it's also a rate hold, so to lock in the rate. Or there's how we do them, which is the fully underwritten pre-approvals. So we input the client's income, we view the income, we actually submit it to the lender who will approve it. So in those cases, our pre-approvals are stronger because you're getting that rate hold, but you're also knowing that you're approved, not that your rate is being held. So there is a misconception that the bank's approvals are firm. They're not. It's more or less a rate hold where we check the credit, like we do the whole package. So we know that it will get approved, and obviously the lender can also decline our pre-approvals too. So if they don't think the client will be approved, they'll decline it. And then we know, and it saves the borrower the embarrassment of going out, finding a home and not working out.
So I've had some clients that are interested in purchasing a home, but not right now. Maybe 3 months, 4 months out. Any recommendations for them on what they should do?
Yeah, so I would still have them apply for pre-approval today, because what happens is when we do someone's pre-approval, their rate actually gets locked in for 90 to 120 days. So it covers that grace period for your client. But it's better to do the pre-approval now and know what you're good for when you do go out shopping, instead of looking at houses first and then applying for financing later, because you might have your hopes set on a home and then to discover you're not qualified. It's kind of sucks.
Yes, absolutely. And then I've heard that there's differences between different types of lenders, so A lenders, B lenders. Can you touch a little bit about that?
Yeah, so the A lenders are more like your major banks, or they call them monoline lenders. They offer just mortgages only. Even credit unions would be classified as an A lender. So the A lenders, they kind of really follow and stick to the government's, it's called B20. It's their set guidelines for the regulated banks and stuff. So most lenders are A lenders. Then there's the B lenders, the alternative lenders, and they kind of each one has their own rules of what they will or will not do. So it's up to us to discover what that lender's options are to match the client up. And then obviously there's private lenders and things like that they kind of make their own rules up fully. Like they don't really have set limits like a B lender or A lender would.
Okay, so there's still hope for somebody that maybe has had a previous bankruptcy?
Absolutely. So even with an A lender, so the thing is though, with a bankruptcy, you have to be discharged for 2 years and have 2 new established trades. So whether that's a car loan, credit card, and you can't have any late payments after the bankruptcy. And then you can buy a home with as little as 5% down.
Awesome, thanks so much.
You're welcome. I have a question for you.
What's that?
So, I see multiple closing dates when a client gets an offer accepted. But what would you say is the best closing date time frame?
Time frame is typically 30 days.
Okay.
That gives the lawyer the chance to do everything that they need to do on their end, and it gives access to a wider variety of lenders in terms of the mortgage approval process.
That is actually 100% true. It's true. There's very few lenders that can do the quick closings, but the 30 days, the client has access to everybody. So that's smart. I love that.
Awesome, thanks.
Yeah.